Let me say something that might challenge you. Most traders do not fail because of their strategy. They fail because of themselves. It's not the indicators. It's not the market makers. It's not manipulation. It's not liquidity grabs. And it's definitely not because you haven't found the right system yet. There are traders making money with simple moving averages. There are traders making money with price action. There are traders making money with no indicators at all. Same markets, different results. So if the market is the same, and the tools are available to everyone, why do most traders lose? Because trading is not a strategy game. It's a psychology game. And most people enter trading thinking it's intellectual, when in reality, it's emotional. Today I'm going to break down exactly why most traders fail, and why it has nothing to do with strategy. Let's get something clear. Most strategies work. Not perfectly. Not 100%. But they work over time with proper risk management and discipline. The problem is not the system. The problem is execution. Here's what actually happens. You backtest a strategy. It shows positive expectancy. You feel confident. Then you go live. First loss, doubt. Second loss, hesitation. Third loss, you override the setup. Now you start modifying rules mid-session. You skip valid trades. You take trades that don't fit your plan. You increase size to make it back. And suddenly, the strategy doesn't work anymore. No. You stopped working. The market didn't change. Your emotional state did. Trading failure is rarely technical incompetence. It's emotional inconsistency. Well, let's go deeper. There are 5 core reasons most traders fail, which I'm going to list in this video. 1. They trade from ego, not process. Most traders need to be right. They don't trade probabilities, they trade identity. Wick is wrong. When you're attached to being right, you move stop losses. You refuse to cut losses. You average down. You argue with the market. But the market doesn't care about your opinion. Professional traders think in probabilities. Amateurs think in validation. That's what makes a huge difference. If your self-worth is tied to your win rate, you will face self-destruct. 2. They can't handle emotional volatility. The market moves fast, but your nervous system reacts faster. In a manner you can't control. Loss triggers fear. Wins trigger greed. Drawdown triggers panic. Big profit triggers overconfidence. If you have not trained your nervous system, you will react impulsively and probably fail for the day. Most traders are not losing to the market. They're losing to unregulated emotions. Trading amplifies whatever is unresolved inside you. If you're impatient in life, you'll be impatient in trades. If you're reckless in life, you'll be reckless with risk. If you fear scarcity, you'll force trades. The charts expose your inner world, which you refuse to admit many times. 3. They overtrade because they're addicted to stimulation. Let's be honest. A lot of traders are not trading. They're gambling with charts. Constant chart checking. Lower timeframes. Needing action. Needing movement. Why? Dopamine. Trading can become a stimulation addiction. The problem is, the best trading often feels boring. Professionals wait. Amateurs click. If you cannot sit in stillness without needing action, you will bleed slowly. The market rewards patience. But most traders are addicted to movement. 4. They have no risk philosophy. This is huge. Most traders talk about entries. Almost none talk about risk philosophy. Risk is not just a percentage. Risk is an identity. Your identity. Do you truly accept that this trade could lose? Or do you secretly expect it to win? If you don't emotionally accept risk before entry, you will manipulate the trade after entry. You'll move stops. You'll close early. You'll interfere. Professionals decide risk first. Amateurs focus on reward first. If you can't fully accept a loss before clicking buy or sell, you are not trading, you are hoping. And hope is not a strategy. 5. They lack discipline because they lack identity. Here's something powerful. Discipline is not willpower. Discipline is identity. Discipline is you. If you see yourself as someone trying to become a trader, you'll behaving consistently. But if you see yourself as a professional, your behavior changes. Professionals don't revenge trade. Don't double size emotionally. Don't abandon plans after 2 losses. Don't need excitement. They execute. Most traders fail because they never shift identity. They remain emotional participants trying to win money, instead of becoming calm operators managing risk. This is where most people aren't ready. Trading is not just financial. It's psychological. And deeper than that, it's spiritual. Because the market forces you to confront attachment, fear, greed, control, patience, ego, trust. You cannot control the market. You can only control yourself. And most people discover they don't have control over themselves. That's the real shock. You think you're logical until you're down 3%. You think you're patient until price comes close to entry. You think you're disciplined until you see a setup that's almost valid. Trading reveals your level of consciousness. If you are reactive, the market punishes you. If you are grounded, the market rewards you over many traders. If this video has helped you in one way or the other, keep watching it every time you feel you don't want to repeat the same mistakes over and over, and always remind yourself, be awake.